In this video, I'm going to show you my high time frame, medium time frame, and low time frame bullish and bearish scenarios, as well as potential trading setups on each scenario. So on the higher time frame, I'm looking for this A, B, C in the bullish scenario, where wave C is then not yet finished, as price did not yet hit the common wave C target of at least 27.7k, but it also didn't hit the rare wave C target at about 25.5k. So in my opinion, we could currently be in a wave 4 in this impulsive structure, where wave 4 tends to be a longer sideways correction. Wave 4 is not allowed to go below the 0.5 Fibonacci taken from the low of 2 to the high of 3, which basically is at the level of 20.3k. The potential trading setup in this scenario is entering around the 382, which is a common target for wave 4. Also has the lows over here of this blue wave 4 for some extra liquidity, before then eventually moving to the upside, where the minimum target for this red wave B, meaning over here we have A, B, and then eventually C. The minimum target for wave B is usually the 382 at about 29.6k. Also nice confluence with this support area, then turning in very nice resistance, looking for a move to the downside, which is the second potential trading setup in this scenario, where entering about the 382 could be nice. Stop loss above over here the 0.5 and the 1.618 at about 35k, and the 1.618 is the maximum target for a wave C pulled from the high of A to the low of B with a normal Fibonacci retracement. Then we go to the bearish scenario, where this could already be the end of wave B, C, and 5, and we're basically looking for much lower prices to come of at least 15.4k in this very high time frame wave A, B, and then eventually C to the downside. On the medium time frame, I have a couple of scenarios I'd like to show you, starting with my alternative bullish scenario over here, which currently is a W, X, Y, X, and then eventually a Z. So we're looking for somehow a three-wave structure in the Z. What I do like about this scenario, at least, or maybe the end of wave Z potentially over here, is that it has my blue target box, including some interesting levels that you can see over here, a weekly and daily naked point of control. So a potential setup in this scenario is entering, trading setup that is entering about the weekly level over here at 21.8k. Stop loss below the low, and then trading it up for potentially wave B in this Z, because we're looking for a three-wave structure, or this can be the end and we're going to look for much higher prices, because the question is this a three-wave structure over here, and is this then A and then a B, a C, or is this 1, 2, 3, 4, 5 and then another correction, and then another correction to the downside, and then creating a longer structure? I'm going to run you through that two scenarios on the lower time frame count. So this is medium time frame bullish count 1. This is, however, my preferred scenario at the moment, where we're currently in a W in the first part, then we have a three-wave X, and we're looking for a three-wave in the Y. In this scenario, what can be interesting is this being a three-wave structure with a very extended C, followed by another three-wave structure in the B, and then eventually a 5 or 3-wave structure in the C. And then eventually we have this target box over here, and I'll show you the potential trading setup as well, where the yellow target box has some very nice confluences, a weekly, daily naked point of control, as well as another daily over here, entering at about the weekly naked point of control of 21,150. Stop loss below the lows over here, which also is the invalidation on the very high time frame. And then one can trade it up in two ways. Either this three-wave structure is going to be the end of wave Y, therefore the end of wave 4, and this is the whole wave 4 before then moving up for 30k wave 5, or this is only going to be the first part of the correction, and then we're going to have another structure and then another structure, creating a higher time frame three-wave structure over here, and then wave 4 is going to end somewhere further down in time, and then we can trade it up to 30k. But in that scenario, of course, the stop loss will be hit. So if price moves up, please don't forget to take profits in case you want to trade sensibly. Of course, no financial advice, purely educational stuff going on over here. The bearish scenario is that this is the high of C and the high of B, and we might be in a leading diagonal, which then is a three-wave 1, three-wave 2, three waves in wave 3. That's what we're looking for, and then another 3, 3. This then is the wave 1, looking for wave 2, and eventually wave 3 to the downside. Now, interesting in a leading diagonal is that usually the volume should go lower the longer the leading diagonal is taking. And at the moment we can see that volume is not necessarily being lower in time or getting lower in time. So it's something to watch in case price is going to continue over here and see what it does. The volume should eventually die down usually, but this is my alternative scenario, and at the moment not my preferred scenario, as I'm still bullish on the price action. Then on the lower time frame, these are the scenarios that I love to show, with currently this being my preferred scenario with the potential trading setups here as well. So currently, again, we have the low of W, high of X, and we're currently in this Y. So over here, I have this as a three-wave structure, like an A, B, C with a very extended C. And then also because this range has been so long, it's a little bit weird to call this a 1, 2, 3, 4, or a 1, 2, 3, 4, 5, because yes, wave 2 is short, but wave 2 is very short in time. Wave 4, however, is super long in time, and wave 2 and 4 do have a relationship with one another. And in this scenario, wave 4 is taking way too long compared to 2. So the longer this is ranging, the less likely this can become a 1, 2, 3, 4, looking for 5 to the downside. So in my preferred scenario, this is a three-wave structure like an ABC, and then I'm looking for this being another ABC. Preferably, I would like to see an expanded flat. The reason why is that we then also hit the very nice target area, my blue target area over here, with some very interesting confluences that are at the bottom right there, being a weekly, a daily, and a daily naked point of control. And also the target area for an expanded flat wave B as it stands now, taken from the low of A to currently the high of A over here, is the 1.236 and the 1.38 Fibonacci. And as you can see, it perfectly matches with the other confluences over here. So that is, it's very nice in my opinion, just some very nice confluence. And then the potential trading setup is entering in this area for the wave B, stop loss below the low, and then trading it up for the yellow wave B. So this then being A, B, and then eventually looking for a C to the downside. And in this scenario, the high of wave B, I believe that this won't provide much of a resistance and price can push through quite impulsively. But then we get into the previous range, where the previous range point of control is resting at 23,465, which is an interesting target as well. And then the high of B could be positioned somewhere over here around these levels, with then eventually looking for a C to the downside, which is the second potential trading scenario, entering somewhere over here. Whatever price is going to do in the future, we don't know yet. Invalidation is the high of X, and then eventually we will trade it down, at least looking for that with a potential trading setup in like this bigger wave Y, which then could be the end of 4 or not, because this is only the beginning. We'll see in the future. The bearish scenario in this case is the leading diagonal as explained, and then locally again we are looking for a three-wave structure in the C. What I don't like, and actually saw online as well sometimes, is this being the high of wave B, because if this is an A and then this should be the high of B, following Elliott Wave rules, wave B has to go to at least the 0.382, which in this scenario it hasn't hit. And if this is then an ABC and this is then another some sort of an ABC, and then we're looking for a structure to the downside, usually the structures are one-to-one structures. So then we have A, we have B, and then the one-to-one of wave A, the trend-based fib extension taken from the high of Y to the low of A to the high of B, is over here. However, in a leading diagonal, wave 3 should be shorter than wave 1. And over here you can see the one-to-one of wave 1 taken from the high to over here, the C to the Y. And then the one-to-one is at this level of about 21.4K. So in this scenario, this wave, potential wave 3 in the leading diagonal, is not allowed to go below this level. Once price is crossing this level, the leading diagonal is also invalidated. And if this is an A, B, and then a C, the one-to-one level is way below the one-to-one that is allowed for wave 3. So yeah, not a big fan, besides the fact that wave B then didn't hit the 382. So actually I'm still looking for at least some push up, whatever it goes, maybe first down and then up, or up immediately to reach at least these levels, if not higher, as mentioned in my lower time frame scenario. This said, thanks for watching. Please subscribe if you enjoy this content and want to see more, because I update 3 times a day. The next video will be at 1 p.m. Central East European time. Thanks for watching this video. I hope you enjoyed it. See you at the next one. Bye bye.